Hello everyone. If required, please pause and have a look. This is the brief overview of Nifty and Bank Nifty price action from last week. For the second week in a row, Bank Nifty outperformed Nifty. Part of the reason RBI interest decision. With that in mind, let's discuss in detail about what happened last week. Weekly wrap for the September last week 2025. Before Monday, Nifty was down for the 6 trading sessions, and as a continuation on Monday and Tuesday, Nifty again closed negative. So it's a 8 straight session continuous negative closing. Fell from the peak 25,400 to near 24,600. Over 800 points vanished. However, after that, in the last 2 trading sessions, Wednesday and yesterday, it rebounded a bit like near 300 points. So, if you see the weekly basis, Nifty increased 240 points or 1% and Sensex also same increased 1%. Now, coming to the reasons, monthly expiry, RBI interest decision and positive global momentum despite the fact US government was shut down. Global momentum had been okay for the last 15 days since the US GDP growth data unexpectedly grown despite all this US tariff ambiguity. And even this week on Tuesday in US, the number of available job openings at the end of August month came decent 7.2 million available job openings, which is really a very good number. So 3 out of 5 sessions in the last week, US market hit the all-time high value. Hence, global momentum is really good. However, we know Indian market is always driven by derivative. So I guess because of the monthly expiry, I believe Monday and Tuesday Nifty closed negative, nothing else. Then on Wednesday, as most people expected, RBI paused the interest rate but reduced the yearly inflation projection to 2.6% from August month projection 3.1% and increased the FY 2026 GDP growth rate projection to 6.8% from previous 6.5%. Here, I want to clear one thing, not in the October month MPC meeting, but in the August month MPC meeting, RBI said that they are going to reduce the CRR from 4% to 3% on the 4 tranches, like on the following date, 25 basis point cut on each tranche. And as per that, they cut 25 basis point on September 6th, which in turn made the cash reserve ratio to 3.75% until yesterday. In this October meeting, RBI confirmed that they are following the previously projected route, which means from today, October 4th onwards, Indian Commercial Bank CRR will be cut by another 25 basis point to 3.5% from yesterday 3.75%. Then on November month on 1st and 29th, the present plan is to cut the CRR further down by another 50 basis points. So the clarification I like to highlight is, it's not new and RBI confirmed they are going to follow the August month plan. Hence, it expects to solve the present and potential future liquidity problem. That's one of the reasons why Bank Nifty increased 2.2%, whereas Nifty was only increased by 1%. In addition to this, RBI did one more important thing, which made the larger bank more positive than the smaller one. It's a very interesting one. Normally, deposit insurance is paid by the bank and it alone cost the Indian Commercial Bank up to 7 basis point in the net interest margin. For example, if an account holder deposits 100 rupees means, then 12 paisa goes towards the insurance. Until now, the premium was uniform across all Indian bank. So, if the premium increases means because of theft risk or any, then all the Indian Commercial Bank has to pay the higher premium. But under the new RBI announcement, from this month onwards, it will be risk based. This means safer banks will pay a lower premium while riskier banks will pay a higher premium. Hence only I said this is negative for small and mid-sized banks which are in a critical position, but positive for large and stable banks with strong fund flows. So overall, despite the fact RBI didn't cut any interest rate, but they gave the hint that they might cut in the December month, which in turn made the banking stocks positive. Hence, in short, first 2 sessions Nifty closed negative because of monthly expiry, but in the next 2 sessions it increased in support of global momentum and RBI MPC meeting made them to close positive. Other than that, macro wise, we know last month S&P Global upgraded the India sovereign rating, which most media cheered for that. So in a way, Indian market expects the other rating agency to follow the same. However, last week Moody's released the India sovereign rating and they haven't upgraded it. Rather, retained the credit rating same as previous Baa3 with a stable outlook. So it's neither positive nor negative, just a info. Then second, another info. Last Tuesday, Nifty had its semi-annual rebalancing and the major change in that was Max Healthcare and Indigo Airlines replaced the IndusInd Bank and Hero MotoCorp in the Nifty 50 index. Moving on, if you see the sector wise, all of them were green. Obviously, banking stocks are the major gainer, especially PSU banks increased 4.4%. It was followed by metal stocks. The broader market, mid cap 100 and small cap 100 both also increased around 2%. Whereas stocks wise on the Nifty stocks, because there was a news reported that one of the major Japanese institution is in discussion with Shriram Finance for acquiring 20% of the company, which in turn made the Shriram Finance stock price to increase 6.6%. Followed by Tata Motors, Kotak Bank, Hindalco and Bharat Electronics, those four stocks increased around 4 to 6.5%. And on the downside, Nifty's new stock addition, Max Healthcare, was the major dragger, down near 5%. I guess FIIs were booking profit after the rebalancing. Anyway, Maruti Suzuki, Eicher Motors, Coal India and Bharti Airtel down between 1 to 3%. Then about institution wise, in the cash market, no surprise, in all 4 trading sessions, FI was net sellers. On the weekly basis, they net sold for 8,350 crore rupees, which then translates on an average for every session, they net sold for 2,100 crore rupees, which was roughly half of what average FIIs were net selling on September 4th week, near 4,000 crore rupees. And if you see for the whole September month, based on NSE preliminary data, it seems they net sold for 35,300 crore rupees. Then moving to DII, in all 4 trading sessions, they were net buyers, and on weekly basis, last week alone, DII net bought for 13,000 crore rupees. So on an average, they net bought for 3,250 crore rupees each session, which is very comparable to their usual average. So it's 1,150 crore rupees higher than the average FII's net sold value. And just for info, on September month, as per NSE data, DII net bought for 65,350 crore rupees, 30,000 crore rupees more than what FII net sold. So that's all about the Indian stock market. Other than that, rupee was very stable between 88.6 to 88.9 rupees per US dollar. And for the week ended 26th September, the India's forex reserves decreased 2.3 billion US dollars to 700 billion US dollars. And regarding gold, because of the US government shutdown, it scaled new all-time high value and it was up for the 7th consecutive week. For the week ended 19th September, it was traded around 3,650 US dollar per ounce. Then for the week ended 27th September, it increased to 3,750 US dollar per ounce. Now in the last week, it further increased to between 3,850 to 3,880 US dollar per ounce. It seems gold is increasing 100 US dollar per ounce each week. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.